So Rob Luna with SureVest, the CEO, what he makes of this. Rob, if we had any doubt that just the latest tide in sentiment on the war is dictating trade sentiment at the corner wall and broad, we're seeing it play out yet again. I guess that'll be the case as long as this war drags on. What do you think?
Yeah, I mean, Neil, markets hate uncertainty, and this is one of the greatest uncertainties that the market's facing right now. But I think, there's some positive notes also. If you look at the NASDAQ, for example, we saw last week, it really bottomed last Monday. Again today, they were trying to sell it off, but it's found a bottom here. I think one of the major uncertainties that's been taken out of the market is the Fed. Even though we're in a higher interest rate environment, that's now been telegraphed, so the market can prepare for that. But, with Russia, with Ukraine, obviously there's going to be daily headlines. That's going to keep some volatility in the market.
I'm wondering, what does the market want from the Fed? I mean, it seemed to be okay with the strategy, which I guess is about a quarter-point hike every time the Fed meets, which is every 6 weeks. But then it hears of internal, fighting going on at the Fed, with some, advocating for still bigger increases, maybe even in between meetings, and others saying steady as she goes. What do you think the market would want?
Yeah, well, Bullard obviously wanted 50 basis points last week.
Right.
I think the market, I think right here does, as you mentioned, like what the Fed has telegraphed. I think it's going to be 25 basis points. I think the way they're doing this, look, they could have done 50 if they really thought the economy was strong. I think they believe, as do I, a lot of the inflation, as we're seeing right now with oil, is still a supply issue. It's not necessarily demand side. COVID shut the entire world supply chain down for almost a year, and we're still grappling with that. So I think what they're trying to do is measure it. They've telegraphed 7, a couple next year, but by doing it that way, if they see things slow down, if the supply chain does open back up, they have some wiggle room that way. And I think the market does like it at this point. That's why you're seeing, if they thought it was going to get out of control, you wouldn't see technology leading as it has since the Fed's announced.
Yeah, the technology is still kind of holding its own up from the lows. I think we're up about 12% from those lows. What do you make of that?
Yeah, well, I think, there's two things with technology and why I like it here. First of all, it's been decimated. You look at a lot of these names out there down 50, 60%, especially in those smaller, high-growth tech names that we saw, skyrocketing for the last couple of years. Now, let's look what's going on. The Fed is trying to slow down the economy. That means that it's going to get harder and harder to grow top-line earnings. There's no segment of the market right now that is positioned better to grow top line other than tech. You look at some of these $2 trillion companies like Amazon, Google, they're still growing at 20%. The other big worry, Neil, about the market right now is everyone's still worrying about this resurgence in COVID. I mean, we just got news today out of China that Shanghai Disney is now going to be shutting down again. So they're worried about that. If you remember, technology, though, during Google did really quite well. They're not going to, I'm sorry, during COVID did quite well, not going to be impacted as much. So I think that's why you're seeing technology catch a bid here.
All right, let's see how long that lasts. Rob, great catching up with you. Rob Luna, the SureVest CEO, and he's right, technology more than holding its own. But concerns about China, as he just mentioned as well, Shanghai Disney is shutting down because of the spike in COVID cases.